Hello everyone, welcome to another episode. I know it's been a little while, but we're getting back into it slowly but surely. Today I wanted to talk about NIO and why NIO's stock has just been absolutely plummeting. It's like a non-stop train going downhill, and in the last 24 hours, it seems like it's just been bad news after bad news, and it's gone down significantly more. So the reality is NIO's getting hit from multiple different angles. So I've written down a couple of things here. I'm going to go over them. Number one, are listed investors appear to be trying to get away from Chinese stocks. Now, chances are this is due to Holding Foreign Companies Accountable Act, which came in law in December 2020. The Securities and Exchange Commission, the SEC, identified 5 Chinese companies listed on US exchanges that violated the regulation last week. Good news is NIO wasn't mentioned in this, but basically a company's shares can be delisted if it fails to adhere to proper auditing practices for 3 straight years. Another thing is spreading COVID cases in China have resulted in new lockdowns, which have many investors quite shaky about Chinese stocks. This has created just more uncertainty in the market and created a flurry of selling off of most major Chinese listed stocks coming into this week. Number 3 are listed investors bracing for higher interest rates. So growth stocks like NIO have been, in particular, have been out of favor in recent times due to the potential of higher interest rates and what that could mean for the economy going forward. Typically, during times of uncertainty, it's not uncommon to see investors lean heavily towards value and income stocks. And NIO has not been alone in this sell-off. A lot of these companies have been going down. What is interesting though, you look at Tesla. Tesla's gone down quite considerably as well. But if you look at a couple of stocks, I'm just trying to remember off the top of my head. But EVgo is one of them. Enphase Energy is one of them that hasn't actually gone down that much. If anything, if you invested in late January, after that first initial dip, I believe you would be up now, depending on which day you actually got in, and quite substantially too, around that 20-30% mark. Number 4, I listed disappointing delivery figures. Obviously, we know that NIO shut down a factory for some time. That was a little while ago now, but to basically retool and get everything up to speed so that they can produce cars at a quicker pace, and as well, the company did mention that was to increase margins. The company's deliveries, however, did fall for a second consecutive month to 6,131 vehicles in February compared to 9,652 in January and around 10,500 in December of 2021. Which is trailing rivals Li Auto and Xpeng, which delivered around 8,500 vehicles and 6.5 vehicles respectively in February. While the decline is partially due to Chinese New Year, Lunar New Year I should say, which is traditionally when you see Chinese automakers or even automotive sales worldwide, depending on manufacturing supply chains, you can see them dip quite a bit, but this was obviously exacerbated by supply chain issues just hitting the auto market in general. Number 5 are listed as inflation fears. Inflation is also forcing companies to raise input costs, which could harm NIO's margins. NIO's margins have grown, however, substantially in recent years. At current levels of around $19 per share, NIO stock, in my opinion, appears to be somewhat oversold. Stock prices are recently just 3 times the consensus revenue of 2022, slightly under the value of rival stocks Xpeng and Li Auto, which trade around 4 times earnings there, and Tesla, which trades around 10 times. NEO might have cooled off in terms of delivery growth compared to historical levels, but according to the consensus estimates, the company will still grow revenues over 75% this year, which is only slightly less than Xpeng, but is well above Tesla, which is a much more established EV company, as we know. Therefore, the depressed multiple, in my opinion, isn't totally justified. So would I say, is it a buy right now? Not sure. There is a lot of things that could go wrong. So, I think everyone needs to take their own initiative, do their own research, and get financial advice from elsewhere if that's what they're looking for. This is not financial advice. However, if you look at the facts are that it is trading at a lower multiple than its competitors, and it's potentially in a better position than many of its competitors as well. So that's one thing to look out for. Personally, myself, I'm holding off for the minute. The last time I brought some was about a month and a half ago. I haven't sold though, ever. I don't think I've sold any of my NEO shares. I have sold out of other EV markets though, however, to reposition a couple of my trades. But NEO is one that I've decided to hold, even though I in all honesty, I am considerably down on that one. So thanks for watching the video, guys. I hope I added some value here. If you did enjoy the video and you haven't already, please subscribe and hit that bell button if you're looking for notifications. Thanks for watching, guys. I'll catch you next time.